Yeah.
Yeah, more like 255-ish.
Okay, yeah.
Yeah.
Well, we should we
All right,
done
you're live.
earlier. Oh, we're live. All right. Perfect. Luke, welcome back. Everyone, welcome back to the live stream. Super happy to be here.
Hello, everybody.
Last time you had to jump off real quick because we're just kind of getting into like ETFs and all that kind of stuff. And I figured it'd be great to just kind of dive in a little bit today about kind of your investment strategy and like how people can start thinking about investing in Canada just to build wealth, because I think there's so much out there, and maybe if we can just kind of dumb it down or simplify it a little bit, I think I give people a little bit more of understanding of like what's possible out there, because I think a lot of people have misconceptions on
Well,
it.
before I kind of get into my type of strategy, I guess it's about, investing in general. It's, like you just really need to find a little something that you're comfortable with and an amount that you're comfortable with investing and just get started. I think that's the most important thing. I think a lot of people are intimidated by investing solely because there's not a whole lot of information there. It's not really taught in the schools, but and most people go to banks and just kind of go hands off, say, hey, just do it for me, right? Not knowing like really what they're getting invested into, not knowing what kind of fee structure that the banks have set up.
Yeah.
That's the biggest one.
You know what I saw yesterday with my son? We ended up watching The Big Short.
Oh, great movie.
Have you seen
love
that
it,
one?
Love it. Watch
I don't know if that's a
good.
good movie to watch before having this discussion, but you're saying that going to the banks, and it's like, I feel like, I don't want to say that they're crooks, but I feel like oftentimes, I don't even know if I should say oftentimes, but they're not really looking after your best interests. Like they're trying to sell you products that maybe might not be the best thing for
business.
you. Their business.
They're
right?
big business, and their business is money. Their business is taking points on everything they sell.
Yeah.
Right. Like when I first got into investing, I think back in 2008, you go in there, the banks are like, oh, we're going to put you in these mutual funds. And they give you a little chart. They say, pick your risk tolerance, low, medium, high. And you're like, but they're like, well, what's in there? It goes, oh, well, don't worry. Don't worry about this. Just a little bit of bucket. And they don't tell you what their fees.
Yeah.
You know what I mean? So obviously I don't even remember what I did. I did an automatic withdrawal, which is probably for a lot of people, one of the best tools that you could use, because
it's a good mechanism to
it's automated. Say, listen, because you don't notice it coming in and going out of your account. It just put it on 100, 200, 300. It automatically comes out of your account, goes into your investment account, and that way it's just automated. You don't really have control. So at the end of the month, when you're tempted to like use that money for something else, it just automatically goes out. It's a really good system that a lot of people follow. I don't do it personally because I'm wired a little bit differently.
Yeah.
I'm a little bit more savvier.
You've been doing it for a while too, right? So
I like to
consider.
I'm very hands-on. I'm very DIY, but once I got myself into the market, and I mean, I took, like I said this earlier, I took like a wild west approach. I kind of threw myself into the deep end, into like penny stocks, marijuana stocks, and kind of went down that degenerate. Which it's
the get rich quick kind of thing.
Every road leads you to where I'm at now, which should be being a long-term investor. But it's all about just, you have to have the mindset first of, I want to have wealth when I am older. I do not want to work for the rest of my life. I want to start accumulating wealth. And it's very hard to not get sucked into the get rich now, get rich fast type of content, type of selling mechanisms that are out there, because
humans are wired for that. We're wired to want it right now.
Well, because when you're investing, it doesn't matter if you're talking to the person next door, your cab driver, you're on YouTube, somebody is showing off their big fast wins. You know what I mean? Whether it was in crypto, whether it was in the technology space. Gold this year. Gold had an amazing year. You know what I mean? I had gold FOMO this year because I'm a Bitcoiner, and gold is doing the thing that Bitcoin is supposed to be doing, and didn't have much gold in the portfolio, so it's not easy, right? But the most important thing is you have to set in your mind that you want to take the steps now to create wealth so that you can have a comfortable life in the future. And you have to create that mindset. And I kind of just have the mindset more, I think I'm more motivated by fear. Like, I don't ever want to be poor. I never want to have to do something that I don't want to do to make ends meet. So it was kind of like the fear of that motivated me.
Do you think that's a good motivation for people to have?
It's what works for me, fear of failure. But it comes with a lot of caveats, and which I had to work out. You know what I mean? You don't want to have fear, because fear can also paralyze you for a lot of things too, right?
Right.
Fear to enjoy your money, which is something that I'm working on right now. Fear to take calculated risks. You know, it's a double-edged sword.
Yeah, for sure.
But you have to. But the first things first, and this goes with like anything you want, whether you're trying to work on a fitness plan, a health protocol, or a new investment protocol. You have to have the mindset for, I don't want this in the future, or I want this in the future.
Yeah.
And you have to have a long-term approach, because the short-term approach, even though it might work, it will always come back and humble you, always. Because if you do the fast-term approach and it wins, more so than not, you're going to double down on that approach, and you're going to lose it all.
Yeah, because it was probably a luck kind of thing anyway.
100%. It was like anybody that doubles their money in a year, they think they're geniuses.
Yeah.
It's luck.
Oh, yeah.
It's all luck. You know what I mean?
Yeah, absolutely. Kevin, how's it going? Oh, new scene layout. I like it. Yeah, thanks. I appreciate that.
Kevin, how's it going, buddy?
We're still working away here and trying to figure out how to do some nice things here, like bringing in some like third screens and all that kind of stuff. But one piece at a time.
Work in progress.
Yeah, exactly. We're working slow.
Yeah.
I actually got 2 more cameras on order right now for the business.
Oh, it's just booming.
So we're gonna have like 5 camera setups and being able to give people like.
Let me ask you a question though. Like I know you're very big. You're very like, you know, your investment strategy is you're putting a lot of time, money, and effort into your business right now.
100%.
But how do you think about investing when you have your business as your number one priority?
I think it's very much the same thing. Like I have a lot of fear per se that's driving me, but not like fear because I'm afraid of something, but just like the thought of being in a position in 10 years that I'm broke or that I'm still back, you know, in square one where I have no money to my name. That is so much more motivating to get me to do what I need to do today in order to build the life I want in the future. So there's that fear. Like it's kind of the same thing, but instead of taking all the money that I make and putting it into investments in terms of like buying stocks or what have you, I just put it back into the business. Mm-hmm. Okay, what do I need to do in my business to grow it so that I can make even more money? Like Andrea, you remember we were talking just the other day, right? Mm-hmm. Where I'm just like, you know, how can I get some more revenue from the customers I already have? And then we're talking about photography. I'm like, what can we do here in the house to be able to create some scenes or whatever to add that kind of things to the customers, right? So we're just kind of I'm always kind of talking about that of like how to grow the portfolio in the way that, you know, I could generate revenue. So
well, you said a number one thing there, portfolio. Portfolios do not have to be stock portfolios. They don't have to be index portfolios. A business can have a portfolio. A business can have different revenue streams within the business. Just like my stock portfolio has several businesses within a business. I have this business that they're all multiple businesses. Me and my wife call them our minions. They're all our workers. You know what I mean? We build it as a business. Me and her take it very seriously. Like our money is our business. It's our fund. And she's really getting into it right now because she sees that this is an actual business. She's learning so much about it, and now that she's able to take the time off work, and now she's going to be full-time doing this with me together, having that female perspective is super huge in our business. But like you said, what you do, like you said, is like instead of taking money and putting it in the stocks, you're putting it into other areas of your business that creates different revenue streams.
It's an asset, 100%.
But it is investing, and it's within your business. The big question is that business isn't for everybody. Oh, you know what I mean? Yeah. Being an entrepreneur, it's because nothing is guaranteed. A lot of people are very comfortable knowing that if they go do this 9 to 5 per se, you know what I mean? That they know I'll do this, I'll get this, I can rely on this as long as my job is intact. But just working for income alone, unfortunately, just isn't enough to create serious wealth. Yeah, you have to be taking that income and having to supplement it somewhere else that is making you money while you're not working. Right.
And investing, whether I invest in my business and other people invest in stocks or ETFs or whatever it is, it's still in business per se, right? Like there's no difference between like an angel investor that goes out there, looks at all the different people that they enjoy, and then they invest in their company, says, here's $1 million, go build the next, Facebook or whatever, so I could like 100x my investment, which is a little bit of a story, but it's the same thing. Instead of doing that, you're just going out to the stock market and finding those good companies that you believe in, or you buy the S&P 500, whatever it is. You're still putting money into the system, which at the end of the day is creating products and services that people are going to consume and make their lives better. And that's all it is.
I'm investing in, I'm investing in companies. I'm investing in assets, in commodities. You're investing in yourself, technically, right?
Yep.
You know what I mean? It's all money being put somewhere. And this is the thing, like me and my wife had a conversation about this the other day. It's all personal. You know what I mean? Investing, business, but especially investing, because I have a couple of really good friends of mine who are very successful within their businesses. And one guy doesn't do any stocks. He just keeps building his business,
right.
And he's done super well over. He doesn't like. I try to like preach to him a little bit throughout the years. Like maybe take some money and put it into this. He goes, no, because I can go buy 4 more trucks, which were going to bring me this much revenue into my business.
Right. Yeah.
And I'm like, that makes so much sense.
Yeah.
That's your lane. You know what I mean?
Yeah.
It's so easy to carve out. You like knowing your lane and saying to my my other good friend who does dabble in the stock market. He's very diversified, but he goes and he buys land and he does real estate, and it's complementary with his landscaping construction business. And I have no interest in that because that's not my lane, but that's his lane, and he can make it work because so much of it is complementary to his other assets.
For sure.
Right?
Yeah, you have different verticals.
You know what I mean?
It's really interesting what you said. This is getting a little into the weeds here, but I love what you're saying about your buddy here who's like, oh, I'm just going to buy more trucks and stay in that way business. For me, though, I love what you're saying about diversification because, yes, I'm trying to build my business right now. That's all about media and content. But I do want to have other verticals as well, too, because what if this fails? What if AI comes over and no one gets video anymore because it's just so dirt cheap, or AI just does it well? I still want to protect myself in case this business does go down.
Yes.
So I'm still like, while yes, I do love what I'm doing now, but I see myself in the future having like some big trust that owns a bunch of different companies and they all go out and do completely different things. So that way I am protected because if this business goes down, hey, but you know what? Yeah, I bought a bunch of gold or whatever that I have, or I got some Bitcoin going in, or I have, I don't run it myself, but maybe I go buy a couple other businesses that I think are going to stand the test of time, like a power washing company, or, somebody that like a mechanic that fixes things. Like, I don't know, you know what I mean? Like, I just feel like I would love at the end of the day to be really diversified in what sources of income that I do have, so that if one aspect of the world goes to shit, then there's still other things that that I can fall back on.
I think that's very forward thinking of you, because you're right. Like, you do need to be protected, right? You know, and that way the pressure doesn't get to you. Right. Because what you're doing, you're working for yourself, you're working a business, and you could go in so many different directions with this, but you're right. You need to be protected in case, it doesn't fly the way you want it.
Look
right?
at COVID. Like, I don't know what would happen to my business now if some kind of COVID thing comes off and then the government's like, oh, you're locked down. You can't have anybody over at your place.
Nobody can go to your studio.
No one come to my studio, and I'm done. Like, that's a whole other issue of what I would do there in that case. But you know what I mean? Like, there could be some unforeseen circumstances where your business could be fantastic, but then one thing comes along and you're done.
Well, yeah, you can look at like a portfolio can be so many different things. It can be this business, but then you can also have another asset allocated portfolio within. I mean, let's break it down. So you can either own a business, invest into yourself, right? You can work for income, which is the other option. And you can invest throughout many different ways. You can become an angel investor, invest in startups, private companies, which is, very high on the risk curve.
Like, put your money in like a private equity fund or something.
Very high on the risk curve. Most of them fail. But if you always hear about the one that,
it's always the one that
is always the one. But that, I've dabbled there, lost most, did okay. Don't recommend it. And then there's the general market. Then there's real estate, right? If that's your bag. I was in an elevator today, funny enough, where this woman had a mop and a bucket and a big thing over her back, and she had tenants that left her house and the place was trashed.
Oh, yeah.
All over the wall. Just one of those stories. And then the other woman in the elevator was telling her about another story that she had where she had people that owed her 3 months of rent, left it in the middle of the night, holes in the wall, just rent. And you know how many of these conversations I hear about real estate?
All the time. It's insane.
It's like, I get it. It sounds sexy to buy a place and you're going to rent it out, and that's all they think about. Well, I'm just going to buy it and I'm just going to rent it out.
Yeah.
They don't think about
easy peasy.
Yeah, just easy. They don't think about all. We talked about real estate before.
Yeah, don't get me started.
I'm not a fan of it, but I do understand that people. It works for people that have the complementary businesses and know-how that can make those phantom costs not so large.
Yeah.
You know what I mean? But that's not my lane.
For the and the problem in Canada too, again, this is going a little off, but too much of Canada's GDP is all in like real estate. Like almost like 1 in 2 Canadians are like, oh, what's your investment strategy? It's like real estate. So it's not diversified as a country. Anyways.
You know, personally here in Halifax, I'm making a bold prediction here, and I'm going to stick by it. Yeah. I think we're going to see some sort of correction.
Oh yeah.
In the real estate market here, especially with rentals. I don't know, because obviously you're a renter, I'm a renter.
Yeah.
And you know what I'm paying in rent is probably about $700-800 more than what it was 5 years ago.
Yeah.
Right. And there is so much all this influx. I think a lot of developers are getting super greedy, and there's all this breaking ground going on all over the city right now. And I just do not know where all these people are going to come from, not where they're going to come from, but how the hell how these people think that everybody's going to be able to afford it, these new things, because I'm seeing it right now. Rent me signs on very popular buildings.
No, really, eh? Yeah.
My building.
That's probably from condo owners trying to figure out how they get people into their
I'm starting to notice it. I'm noticing that some people are lowering. I'm starting to notice that some apartment buildings are starting to give incentives for moving in. You know, first rent free. We'll pay your moving cost. That stuff wasn't around.
That's huge.
Now with all this property coming online.
Oh yeah.
Like, I'm just saying, I like to see what happens in 5 years when all this infrastructure comes online. Because will the supply meet the demand? I don't know. I think that there's going to be too much supply and not enough demand. That I like to see how it's going to shake, because I've never seen a system where rents go down.
Yeah.
They just stay stagnant. Yeah. You know what I mean?
Well, now, it's going to be interesting times for sure.
Yeah. So anyways, back to investing. So anyway, the next bucket is obviously the markets. Now, this is the most broadest array of investing that you can look into, because you can go stocks, you can go indexes, you can go into commodities, and you know what I mean? And then ETFs of everything. ETFs are the most popular thing going on right now, for rightfully so. So an ETF is an exchange traded fund, which holds a portfolio of assets, and you buy the basket.
Yeah. So instead of trying to go out to pick individual stocks, you just have an ETF which owns you own the basket, and they're so big in popularity right now. And they, it's the way I like to invest. I think for good reason too, because it is easy and it's great for people to start out. And I think if you pick the right fund, they're just following the market.
Stock picking is extremely hard.
Oh, yeah.
It might be like, well, I'm just going to buy Apple and Google and Nvidia, and I'm just going to buy. But tell you right now, these big mega cap companies can get soft. Oh yeah. And they can underperform for years. Yeah.
And they're also expensive per share too, right?
They're expensive. They have expensive
relative, but
yeah. So the share price is just a calculation of their shares divided by their market cap.
Yeah.
So the share, that's one thing with investors. Like when you look at, just always remember, when you're looking at a share price, it has nothing to do with anything. It's just a calculation. What you want to look at is their market cap. How much this company is worth. So right now, which is crazy, we have $5 trillion companies right now. What
was that last one that just came to $1 trillion? I can't remember what it was. Which one are you talking about? Like, what's Nvidia worth?
So Nvidia is the most valuable company in the world.
They surpassed Apple.
So it's always between like Nvidia, Apple, Microsoft, Google. those four companies kind of like teeter totter up and down, but Nvidia is kind of taking the crown right now because
I think they'll go back down at some point.
they are the AI chip makers.
Yeah.
And that world is just blowing up.
But once
right
that
now.
bubble bursts, though, because I think it's going to at some
All
point.
bubbles get to a point where they burst.
Yeah.
Right.
It's
And I
just
mean,
how far down is it going to go?
I mean, that's what
kind of
makes a
question.
market, right?
Yeah.
That's what makes a market. It's when, things just, they get too exaggerated to the upside, and they are just not trading on fundamentals anymore. They're just trading on hype. But but the thing about this is that this move that we're seeing right now is totally justified. Believe it or not, Nvidia is actually cheaper than most on a PE basis. It's actually one of the.
What does that mean, PE?
A PE ratio. It's basically its price to earnings. Don't ask me much more than that because I'm not anybody that's savvy enough to.
So it's like in terms of how much dollars that $1
it's just a calculation
makes.
of what they earn to their value.
Yeah.
Right. And it's just a ratio. Some people take it as gospel. You know what I mean? But they'll throw out. It's just a point that talking heads want to reference when a company, well, their PE is only this, and then they'll be like, well, it should be this because blah blah blah. They'll create a narrative around it, right?
So that's where you can get into the weeds as well and talk about like, oh well, most of that money is like government funded, or it comes from all these different sources, or companies are paying their money back into themselves and making them look like they're having more business than they are, because Microsoft will do a deal with OpenAI does a deal with like Nvidia, and then Nvidia does a deal with the Microsoft. Like, it just goes round and round in circles. I've seen some of these tech trees of like where the money comes from, and it's like all coming from the same sources, and they're all like procuring from each other. Like, it's very very strange.
So like, I mean, well, this is the thing when you're speculating on a particular stock. Look, I know a lot of people, and I got like this, like especially like stocks that create a lot of emotion, like Tesla. Yeah, Tesla is a cult stock, and like that.
I heard SpaceX is going public.
So we'll talk about that. Yeah, so stuff like Tesla that trades on future fundamentals. So Tesla's like PE ratio is up in the roof. Like they're trading on an evaluation that. That's based on like 20 years of the future,
and like what it could potentially.
Then that's what happens to stocks. They create narratives. They talk a good game, and they if the market can see some sort of future for a stock, it prices it in real time. That's the hardest thing to understand about the stock market is that it prices in future earnings. Right? Yeah. It doesn't. So when a lot of people like get into a stock and their earnings come out and they put out good earnings, and then the stock goes down. They're all like, what the fuck? The fuck? I just bought this stock and they had good earnings and it went down. Yeah. Well, that was priced in. Yeah. We've already priced that into the stock. Now, but they told you that their next quarter is going to be soft.
Yeah. And when you say priced in, that just kind of means what the whole market and what people think in terms of where that company's going to be going.
That means that where that stock price is, it's valuing what those earnings were. So basically when you have so you can look at a stock price and you could say, well, this has this priced into it, has this future revenue priced into it, it has this inability to create these products priced into it, right? And that's what stocks end up doing. Like if a company like Tesla says that they're going to make robots, and the market will be like, okay, well, they're going to make robots and they're going to create billions of dollars in revenue and these robots, and we see a future for it. Well, we're going to run the stock up billions of dollars in revenue because we see that future for it. Then when the robots come out and people start buying the stock, and then the stock corrects to the downside
because there's
because that got priced in and that got priced in already.
I see what you're saying.
So when the robots come out, everybody starts buying the stock, and then people that bought it in anticipation for the robots,
that's when they sell.
That's when they sell. Yeah. Which terms sell the news.
Yeah,
right.
Yeah. Interesting.
I had to learn that the hard way in the marijuana industry, because my biggest thing was when I wanted to get into the marijuana industry before legalization here in Canada. That was the big trade. It was an amazing trade, like a 10x trade. Yeah. Right. That's where I made the bulk of my money, but where I got lost and gave a lot of it back was once legalization came. That was sell the news. Yeah. That it all got priced in. Yeah. Right. And then people buying, oh, we're legalized, we're gonna buy. Then everybody's dumped the money on them, right? Right. And then the real risk was if legalization didn't pan out the way people thought it was, then there was room for error. That, okay, these stocks are way too valued. These stocks are valued 5 years into legalization. And then as legalization came out, there was so many hiccups, like the government just screwed everything, right?
Yeah.
Obviously.
The government, yeah, of course.
You know what I mean? So that's the thing when buying stocks, because you don't know what you're buying half the time. You know what I mean? Like, what if Tesla doesn't, the biggest risk with something like Tesla is what if they don't perform anywhere near what they're supposed to, and the market starts sifting out that they're not going to be this futuristic company. That, I'm not saying that they're not, but they're priced to be it. So people that are investing into it, it happens all the time. It happens.
That's part of the risk, I think. I guess
that's the risk with buying individual stocks. So that's why buying an ETF, a basket of all that can hold Tesla, that can help bring that ETF up. But if all your eggs are in like a Tesla, because I know a lot of people are just Tesla,
and that's it.
Yeah, they're just Tesla fanboys, and all they'll buy is Tesla stock. Yeah. Like Tesla right now is like, we're on this massive AI rally right now, and Tesla's not performing. You know, Meta's not performing.
Yeah,
Microsoft is not performing.
Microsoft.
You know what I mean? You know what I mean? You don't know what stocks are going to lift the tide.
Yep.
You know what I mean? That's why you just got to own the indexes. You know, the index is up 20%, which is basically what I'm solely invested in, which is the QQQ, and that's gone up like, I think it's up like 20% for the year already. You know what I mean?
Yeah. So let's go. Like, this was pretty in depth in terms of like kind of psychology behind like how individual stocks go. But what about someone who's listening that's kind of like the beginner, right? Like, I think we laid out some pretty good steps and some groundwork. Number one is like, what's your mindset? Like, you want to think about going for the future, not these short-term wins.
Yeah.
So you have the mindset. But then what are the next actionable steps? Because then you said, okay, well, how can we maybe set up a automatic withdrawal so the mechanism is in place to start investing in whatever that avenue can be? So you got the mindset right, then you got the mechanism in place to just automatic withdraw, $100 a month, 500, whatever you can afford. Then what's next? Then as the beginner, what should they look into or to keep in mind when they're trying to figure out where they should invest their money? Yeah, that would be, I guess, almost like the final step, I guess.
Yeah, so you touched on a good point there with is like the mindset approach. First of all, get your mind built around investing. Read a couple books. I don't care what it is. Just get an investor's mindset and get involved.
Well, The Psychology of Money, I think, is a good book, for people to start.
Have you read it?
I have it. I've read parts of it now.
Yeah, I've read it twice.
Yeah.
I've read it twice, and I've read all Morgan Housel's books. Yeah. He is one of the best financial minds. Yeah. Because he does not... The best thing about Morgan Housel is that he doesn't tell you what to do. He gives you the tools to think for yourself.
Right.
Which is the most important. And, you know,
so let's recommend those books, at least that one anyways.
Yeah, The Psychology of Money by Morgan Housel, The Same as Ever by Morgan Housel, and The Art of Spending Money by Morgan Housel, which is the one that I really got into because I'm trying to learn how to enjoy money. That's the step that I'm in, which we can talk about a little bit later. But... you know, you need to get a mindset for investing. You need to understand the power of compounding. You know, 1 turns to 2, 2 turns to 4, 4 turns to 8, etc. Understand how that works and understand that the power of compounding only really shows its true wings towards the end. You know what I mean? Like, it takes a while for that 1 to go to 2, even longer for the. But once you can go from 4 to 8, and then 8 to 16.
That's huge.
Just think about that in terms. Anybody that's listening, just go plug. You know, there's all kinds of tools, investing tools. Go plug in the information. If I put $300 into an S&P 500 for 20 years and I keep my contributes solid, just go look what that can compound to.
We were saying too how we did the other day, I was like $100 whatever over 40 years, like it's over $1 million, and like 950,000 of that was like interest, and only 50,000 is just the money you put in, which is insane.
So let's talk about another part of here. So a lot of people are like, and this is probably what a lot of people are saying in their head, well, I don't have any money to invest. All right, but this is a little bit of tough love. You know, I know a lot of people, you know, can't make ends meet out in the world, and it's very sad. But let's just talk about the people that do have they can prioritize the money, whether it's cutting out that, you know, that drinking on the weekend, cutting out those cigarettes, cutting out the eating out.
Yeah, like I don't want to hear anything from people like, I don't have any money to invest. Yes, and they're smoking and they're drinking.
I'm sorry,
like
I slept on couches when I was 19 and I rented rooms for first 5 years from when I was 19 to 25, and I was building up a nest egg.
Yeah.
I didn't invest it, but I was building up a nest egg.
Yeah.
You know, eventually that money found its way into the market, but I was saving, right? You
Yeah.
know, so you can save your money. And like, I know a lot of people are good savers, but they don't think about the investing part. I know a good friend of mine as well, who has like a $250,000 saved up in a TFSA, but not invested.
Yeah,
and I'm like,
that's great. That's bleeding money now, though. But that's another story.
No, let's talk about that.
Yeah.
Why is it bleeding money?
Oh, well, that's just the inflation.
The inflation. Yeah, the inflation's going to take.
And it's so high. It's crazy. Because $250,000 now in cash, if you just had that, in 10 years, you're going to be able to buy like half of that. So in technical, it's going to be worth like $125,000.
Exactly.
You know
hence
what I mean?
the term.
So it's crazy.
Hence the term cash is trash.
Yeah.
Right. Like you can save your money, but realize that that money is losing money by not being in a vehicle that's gaining you wealth.
Think about what, you know, when your parents and grandparents were like, you could buy a loaf of bread for 5 cents. How much does a loaf of bread cost now?
Yeah.
Right? It's $5,
and I mean, that
right?
game is never going to change.
Yeah.
Right?
Well, for sure. Exactly.
You know what I mean?
So you got to understand it in order to know how to beat it.
So that's the thing. And so you need to find a way. And if it like for me, it's like Warren Buffett. The funny thing was he used to go out to dinner, and I read this massive book on Warren Buffett. Like he's the person that I'm like I follow him. Those types of guys that just want to compound. Although he was an amazing stock picker, but his method to grow his money is where I take a lot of his mindset. So he'd go out to dinner, and they buy this big expensive bottle of wine, and when the wine come back around to him and they say here, and he goes, covers his glass. He's like, no, he goes, I'll just take a couple extra shares of XYZ company. That's what he'd say. No, I'll just take that one and I'll just throw a little bit in. He would never splurge on things that created no value. That's the thing. It's like all his money had to have some sort of purpose of value. You know what I mean? He did eventually buy things when he became a billionaire.
Yeah.
You know what I mean? But like, that's the thing. It's
that's
like
what you're saying, the trade-off of learning how to spend your money and like knowing what your goals are.
Like if this brings no value to if a certain amount of money does not bring any value to your life, like I'm saying, if you know, buying extra clothes that you don't need, or the whatever, it's the extra car that maybe you don't need, or it's just little things, or these, whatever the case may be.
That's a tough soul searching thing, because a lot of people do think that stuff brings some value.
They do think it brings. But I think that's a live and learn type of situation. I didn't learn that until I was in my late 30s. That materials bring me no value.
Yeah, it's tough when you're young. It's hard to tell a kid.
But the thing about it is, the most important element is not the best word. The most important variable or characteristic or tool for investing is time.
Yeah.
The more time you have, the more wealth you can create.
Oh, yeah.
You know what I mean? Wealth takes time.
Did you hear that story? I don't know what it was. Again, I don't know if it's true or not, but it was some old mayor of Chicago, and he understood the whole thing of compound interest, and he put some money away, like 2 funds of like $5,000. Again, this is back in the 1700s or whatever it was. And he was like, okay, this city, you guys can't touch the fund until like 200 years later or whatever. And then it grew to millions and millions and millions. Then there was this huge fund of money that finally got released that the city could use to build whatever it was. Because he understood like this $5,000 now, it's going to be hundreds of millions or whatever in the future, right? After like centuries, right? So I was like, that's a really cool story. Because like that, why don't cities do that? Why don't people do that, right? Because you're not going to be there to see it, and I don't know. You want instant gratification, whatever the case may be.
So this is the toughest thing for anybody that's, we're in our mid 40s, and hindsight bias is a bitch.
Oh yeah.
And
man, if we knew what we did not know,
but I
back
can't.
In the 20s.
I don't. It doesn't bother me anymore because I'm just. I think because like if I'm thinking like if I was 25, because I don't count 19 to 25 because you're a kid. You know what I mean? There is some savvy kids that are getting into investing, but let's be realistic. Like let's call it 25 when you're starting to become an adult, because you're not really an adult till you're 25 as far as I'm concerned.
All right, we'll take it.
Yeah, in maturity of understanding life, right? But if I would have started investing back 25 and I had done it consistently and I had the 25 years or 20 years of compound under my belt
already.
Wow.
Again,
you know what I mean?
What's the next 20 years?
But that wasn't the path for me. Like, it really wasn't accessible to us. Like nobody talked about investing. It wasn't talked. My parents never did it.
Yeah. It's not
nobody that I
all.
knew ever talked. Well, number one, it wasn't easily accept. There was no DIY investing back then. I'm pretty sure that
That's
only
true. The products didn't exist. You had to go talk to the banker or the
God,
financial whatever to be able to buy you this or buy you that.
It was a big process,
Yeah.
right? But I'm very happy that I have what I have now because I still have 20 years of growth left in me. You know what I mean?
Yeah.
And I still did fairly well to get up to this point. So I have a good,
That's the thing. You could offset the lack of years in the market by just having a good influx of cash as well, too, right? Because if in the past 20 years, from 20 to 40, you would have made like $2 million. Okay, well, if you have $2 million right now, then great. Exactly. You're starting off at the same point anyways, right?
Yeah,
so.
I think the thing with investing in markets and making money, it's always like, well, if I would have done, like the market is the most, it's the most complicated psychological aspect of shoulda, woulda, coulda. Mm-hmm. Do you know what I mean? Like, that was the hardest thing when I was doing like my actively trading phase, because you look at the market in the morning and you look at it in the afternoon and then it's like, oh, I should have done this. If I could just, and then that's where all the, the mental anguish comes in with trying to be an active trader. Because you're trying to control something you can't control. Yeah. You're trying to control something in the short term, and there's just no controlling it because you can't control news flow, you can't control headlines, you can't control scandals, you can't control Trump. You know what I mean? You can't.
I could never do that, like trading, day trading, or even active trading. Like, no, it's not for me. Can I, one thing I was thinking of doing, let me hear what your thoughts are on this idea. So I was talking about my business and how I want to diversify like my money and everything like that. I was thinking of what if I did something where, and then I guess we document this process of what if I started a TFSA or whatever it is and started investing, like whether it's through the business or like my personal name, whatever, $100 a week. Mm-hmm. And then saying, where's this going to go in 10 years? Because $100 a week is like what, $5,000 a year times 10 years. So that's 50,000. Where could that be in the next 10 years? And then just kind of almost like document that whole process. Like, hey, just you do a quick little video. It's like, oh, this week, okay, I'm going on Wealthsimple. I'm going to buy this and this and that. And then just see how things go and showcase the story of what the compound interest could do. I don't know. Like, I
think it's a beautiful thing.
It's two birds in one stone, where that could be my mechanism of forcing me to do something. But also, again, diversify.
Sometimes you need like, ulterior motives to help you do something. You know what I mean? Like, first of all, you should be doing it anyway. You know what I mean?
No,
like, you do it anyway but then by documenting it, it's also gives you another avenue for the platform to show, hey, I'm going to try this. You know what I mean? I just think it's a good show of like, the most important thing that with investing, it's, people can say, oh, you just invest your money. You're so, and you held on for 20 years. That's so easy. It's not easy. The people that held for 20 years deserve way more
a lot of
credit than the people that traded in and out of stocks.
Yeah.
I'll tell you right now, because, obviously if you traded in and out of stocks, you made millions and millions of dollars. Hats off to you. You're built for that. You can handle that. That's fine.
Yeah,
but it takes another special person to, like, if you were invested for 20 years, you probably sat through 5 to 6 significant crashes.
Well, right now, 20 years. Oh, I mean, you got 2007, 2008. Then you also have 2019. Those are the two big ones, I think.
The dot-com era.
Oh, that was like 25 years ago.
No, that was
2000.
Okay, yeah,
so that was like 26. Yeah. We're getting too old now, man. It's almost like 2030.
Well,
it's crazy.
Yeah. So you got. This is kind of like the average saying that we get a serious crash bear market every 10 or so years.
Right. Yeah.
Right. So you could look at the dot-com era, which was one, and then you got the financial crisis. Yeah. Then you got COVID. Yeah. But then we had another bear market after COVID, which was very hefty. It was the rate increase bear market for inflation. Yeah. You know what I mean? I got smoked on that one. That was the best thing that ever happened to me as an investor, because that's what made me change my tune about investing. Was going through that bear market.
And then just basically, did you just ride it out then?
It was a lot of, it wasn't like an aha moment where I'm like, I'm going to change. It was more of like I found my style of investing, and I kind of eased my way into it. And slowly I started off with like 20% into my income investing. And then I started getting more comfortable with it and seeing how the psychology of it was helping me stay invested, which was the most important thing. By getting that income, it made me just stay invested because I just collect the income, and it was that part of the psychology. And then I started getting more comfortable with it, and then I started moving more money into it, and it was more of a transition that was like throughout like a year and a half to where I started saying, and then because I was also doing the trading also as well, you know, because I was kind of more of a hybrid, doing the income investing and doing the trading on the side, and then I fully converted. Then I was about 80-20, like income investing with doing some trading, and then after the Trump tariff crash, I was like, I had enough of this.
Like I can't take
you know
this
what I mean? Because
anymore.
I was trading into it, and that was just, you know,
the swings.
The swings were too much. I was just too attached to it, and just living through it, trying to navigate it with the noise. You know what I mean?
That's crazy.
I wasn't, and you know, and I didn't realize, like I thought, like I was going through, you know, psychologically, I thought I was going through like really bad like sleep problems, or I was just, you know, I was kind of like anxious and kind of like edgy a lot, and I didn't really know it that much. I went through kind of a sleep problem, but when I got away from it, when I got away from the trading, about 3 months of like withdrawals, because I had serious withdrawals from the market, from not being able to check the market like first thing in the morning.
It's almost like that was part of your your identity
it was
in a
like
sense. Like I need to check this
I
because
was into it 5 years.
That's crazy.
5 years I've never missed a market open. 5 years I've never missed a market open. And getting away from it, about 3 months into it, getting into my style of investing now, fully committed to my investing strategy now, the release of anxiety, the sleep, you know, and I made more money. I make more money
now
because I just stay invested and I don't try to control it.
Yeah, it's funny because my investment style is so different than yours, at least what it was before. Because it's like I just buy stuff and then that's it. Yeah, and then I watch it. Yeah, it goes down huge. It's like okay, well, whatever.
It's not your
bread. And it just comes right back up. You know, I check it again 6 months later, and now it's
like
up
we talked about this before. It's when it's the amount of money that gets you a little bit more emotionally attached. Not saying I don't know what you have in there, so I'm not saying, but your bread and butter is this business.
Yeah.
So if this business was to go through some volatile
like
times,
we're saying, I'm
you know what I mean?
losing sleep, and
you know what I mean. If like all of a sudden, you know, hence I don't want to talk at a term, but if things just started going sideways, you know what I mean? Then you know you'd start being affected, and the biggest emotion is they call it tilt. Right.
Oh, I play a lot of poker. Or at least I used to.
So you understand it when
the poker and it's the same. I think it's the same thing.
Oh
right?
yeah, exactly.
I got my hand. Oh, I'm losing, and like.
And then you start making emotional moves,
emotional bets.
So there's a term in trading called revenge trading, right? Which is probably the same thing. Like you're just going to go all in on the next hand. Well, that's what it is. So like, my God, like I lost on this one. Or the biggest one is when you miss out on something that you want to go try to make it up on.
It's like, if I wouldn't have folded that hand, I would have won. And it's
like, oh my God, I just missed Tesla. Okay, well, I'm gonna go put all my money on this next stock. 'Cause I think, you know what I mean.
Yeah, you're not playing. You're not playing the fundamentals.
So and I tell you right now, there's a lot of people that's the serious issue with trading, with trying to actively trade. It's when you're actively trading and you're speculating on the short term. There's a lot of skill involved.
That's why I feel it's just it's like playing poker.
It's calculated risks, but the shorter the term, the less control you have over it. So the most important thing that I've learned,
you got to be able to play long term.
You have to be able to, and like the point that I was getting back to is the people that stayed in the market for 20 years, for them to stay on the ride throughout the volatility, that is each in its own an accomplishment that deserves a medal.
If they're doing their active trading, if they're like active traders, or just having money,
the people that decided that we're going to invest and we're going to just keep it simple. We're going to add to our investments on a some sort of program, whether it's automated, whether it's manual.
I hear what you're saying.
You know what I mean? But they stuck with it and they never got shaken out, and maybe even took the advantageous road and added during the crashes, which is what you should be doing. People that done that, those guys, that is not easy. That is not easy.
It's the opposite psychology of what most people do, which is why it's weird, because like Warren Buffett says, the easy things, you don't just index funds and whatever, and it seems pretty easy, but yet most people don't do it. I think it's that psychology thing.
Morgan Housel has the best quote. He says, the cost of admission is volatility. You know what I mean? Like, anybody can go buy a stock, anybody can go put their money on something, but for you to stay on that ride for a long period of time is not easy, because like, especially most people get invested in bull markets. That's the biggest, like most people like, well, the worst thing that could probably happen to an investor is they invest right at the beginning of a bull market.
Well, that's what people do, like the housing market. Like, oh, this is fantastic. The housing is always going to go up, and then people invest. Like, I always think of, by the time you hear of something doing really, really well, and you're like, I want to buy it, that's like the worst time.
That's what creates. That's what
you're just
creates,
buying into the hype. You're not actually buying on the fundamentals of the company.
That's what creates tops, right? Yeah. When everybody's that was left to buy has all bought. They call it blow off tops, right? That's okay. And it's the same as at the bottom, capitulation, right? Capitulating bottoms is when the last people that just can't hold on any longer, the weakest hands, you ever see that fear chart, fear and greed chart?
No.
Oh, it's a great chart. So basically it kind of starts off with like, especially when it's kind of like dipping down, it starts off with like denial. And then I think it goes down into like despair, and then acceptance. And,
like the 12 stages of grief or something like that?
That's what it is. Yeah, the 12 stages of grief. And then it's like, and then it just kind of like, because that's what happens. Because some people just go down like 10% on their investment. They're like, oh, whatever, it's just going to go back up. But then it goes down 20%. Yeah. Right? Let's just talk about a volatile stock. And then they're like, ooh, maybe I'll buy some more. And then it goes against them again. Yeah. And then it goes down, and they're like, oh, then they're nervous. They're self-conscious. They're starting to go on the internet. Then they go on the internet. And what's the internet telling you? Get out of your stocks. Yeah, get out. We're crashing. And then they can't sleep. And then I've been there.
Or the company's going to go bankrupt.
And then it starts building up, and then all you're doing is watching it. Please go back up. And then it doesn't. It just keeps. And then it gives you a little hope. Like they call them little
rebound
relief rallies, right? Yeah. Which the whole sound of a relief rally, just a little relief from the pain, and then back down it goes again until you just get this flush. Yeah. And then that's my bread and butter. You know what I mean? When I know I can dictate a flush, because I can almost tell you right when they're building. I was like, I told my wife, like during the Iran war, I was like, there's a flush coming. Like there's a flush building right now, because the market wasn't buying into anything. It's just holding on. I said this market isn't going anywhere until we see a flush. And it wasn't a big flush, but we got a little bit of like, a mini little capitulation. The world was kind of like into a little bit of despair, but it didn't last very long.
Yeah. So all that stuff you're saying, that's over my head in terms of even what I want to know about it, because I don't, again, like I'm not like what you're talking about. I totally get what you're saying. Yeah. And how people get under despair, especially when you're picking individual stocks. But that's why I just avoid that. Yeah. Like, I don't want to know whatever this is what's the war like. Yeah. Just index me to the whole goddamn market, and that's it.
100%. And then I'm just going to forget about it. The only reason why I talk about this is because people need to understand, like I've been there, I've made these mistakes. Like the stock market is not a game. Like it might because when the bulls are in control, everybody's happy. The content is flowing. They make it look easy. And the worst thing you could do is get in right at the beginning of a bull market and think that this thing is easy. Because what it's going to do, and that's why. Like I think I'm about 8 years experience into the markets now, and I'm still learning. But I've definitely got my footing, and where I understand the risk. And I think that's the most important part, is that, I want my money to be always working for me, not against me. And for me to like, I would rather have large allocations to index funds that are going up, 10, 15, 20, maybe even 25% annual compounding, and be able to rely on that than trying to figure out the next the next 10 bagger. You know what I mean? Like that's because I will make more money having my whole net worth growing on a nice compound annual growth rate than trying to figure out the ins and outs of these volatile assets.
Right, exactly. Because you look at the way the market grows and how it grows, like, you said 10 or 15% or whatever annually. And then you add in compounding on top of that.
Yeah. Like so my goal is to compound at 15% a year. with my portfolio. That's my goal. That is some people be like, oh, that's not a lot, but that's my baseline. I think I can outperform that, and I have been outperforming that because I do have a trading strategy within my portfolio. It's not a day trading strategy, but I do take advantageous trades. But for me to be able to live off my portfolio, I want to make sure that I can compound 15% annually a year, so I can enjoy my income.
Yeah.
Right.
This is interesting. I'd love the whole idea of, putting the money where the mouth is, in a sense of seeing what we can do. Like, if we do this thing where, again, $100 a week for the next 10 years, and that's $50K. How much do you think then realistically that could grow into? Because you're saying 15% over the year. Like, what would that, do you know the math on that?
Pop it in.
I don't know how you
pop it in. There's got to be a compounding calculator in there. Yeah. So the thing about it is that, you do that, and, you pick the easiest, why don't you just pop it into
okay, initial investment. Well, there's zero, $100 a week. And then the interest rate is what you.
Well, why don't you? Can you pick an index fund to get a real?
Oh, I just did this compound calculator.
Well, yeah, put it in the 15% annual growth a year for 20 years.
All right, so 15% interest is compounded. Then you want to do yearly. Time horizon, 20 years. Calculate. Oh, initial investment. Okay, zero. Didn't like it being blank. $568,000.
$568,000.
Yeah.
Just for 500. For how much? What was the?
100 a week.
100 a week
for 10 years. So that's like $52,000, right? If it's 5,200 a year, right?
Yeah.
Yeah.
That's really good.
Yeah, that'd be insane. Andrea, what do you think about that?
I like it.
So you got to think about it on this thing. Like, that's just sacrificing $100 a week that you don't spend on something else.
Well, that would be taking it out of the business, right? Like, okay, well, the business would take that and reinvest it in the business. Like, okay, well, let's take that and then just invest it in something else, right? Other businesses, right? The stock, whatever.
You won't even notice it. Like,
I'm hoping not.
Yeah. No, I get it.
That's $400 a month or whatever. So it's not an insignificant amount of money.
But it's going into something. Right, but it's going into something that's creating long-term value.
Oh, for sure.
You know what I mean? Like, you know what I mean? Like I was saying, like,
for 10 years, I'll get $500,000. All right, let's.
And that, and that's like.
We'll see.
Yeah, I mean is that based on 10 years or 20 years?
That's 20 years.
That's 20 years.
Oh, that's right. Shit, I said it was 10 years, so it's not gonna be that much. Yeah, that's gonna be too much. So it's gonna be so it's a lot less. Wow, look at that. So that only doubles. That gets to $112,000. So it makes $60,000 in interest. So it's a lot less, which makes more sense. Maybe that's a little bit more realistic, right? There we get in talking about that whole compound thing of how long it takes.
So you'd be investing $5,200 a month,
a year.
Oh, $5,200 a year.
Right.
Okay. Well, that's
yeah.
Oh, that's still
so little more than doubles your money in 10 years.
Yeah. But but still that's
because that's like what they say is like the rule of, was it 72, like, or 8 years to double your money, in the average stock market. Did you ever hear something like that?
Yeah,
I don't know exactly what it is, but
yeah, there's all these different kinds of rules. Yeah. But I mean, nevertheless, the golden rule is that you can control your contributions. It doesn't, you could put as much. I still think that any money that is not being used, that's not creating you value, should be going into investments. Yeah. Because trust me, the value that you will have in your older years to be able to give you comfort and, take away the stress and be able to have more time to spend with loved ones. That's what it is. That's what life is all about. And in my eyes, is like, for me to be able to have, there's this term that me and my wife use, is called going to sleep without an alarm clock, which just means that at night you do not need your alarm clock. It's kind of more of a metaphor than anything, but it's like when you're enjoying your night together, knowing that you don't have to get up in the morning to do something that you don't want.
Yeah, and usually that is some kind of relationship to money. Like, you have to do something because you need to get money for whatever reason.
Exactly.
Yeah.
You know what I mean? My wife's, like I said, my wife's a teacher, and I notice a huge change in her when we're trying to enjoy our evenings together when she has to work the next day as compared to when she doesn't.
Yeah.
She's a totally different person.
Yeah.
You know what I mean? And I just think that, you know, that is the dream, right? To be able to just and have peace in mind. It's, you know, I'm enjoying that lifestyle right now, and it's amazing. You know what I mean? But it takes a little while to own it, because you still feel like it feels a little too surreal. You feel like an imposter, like I should be doing something. I should be starting a business. I should be doing more.
Yeah.
You know what I mean?
But
then,
you are doing something. You're just doing it in a non-traditional way that
well, I mean,
makes you think that, why is it like, that's a good question of like, why is it that you feel like you're uncomfortable that you're not doing anything, even though
this is the psychology that I'm working through right now, right? You know what I mean? Because you're just bombarded by seeing everybody going and getting it. You're seeing the perception of everybody going to get it.
It's funny. If you don't mind, going back just a little bit about what you said before about the ups and downs and the stomach aches and the stress that's involved in like trading stocks and everything. It really reminds me of the hustle culture that's in business now and entrepreneurship, where it's like, hey, you got to work 16 hours a day. You know, you're sleeping on the floor and you're doing all these things, and your health is deteriorating, all these things. And to a certain point, can it get you success? I think it can. And I think there are times when maybe you do have to bear down and work really, really hard. But more often than not, it's usually not good for you to go out that way and to try to build something in such a negative fashion that's detrimental to your health and well-being. So it's such a trade-off. And I feel like it's easy for people that have already had success to tell people to take it easy, because especially if that's the way that you have built your own wealth, like for you, like, oh, it's so stressful. Yeah. But you also got good and you made a whole shit ton of money by doing that as well too. Right.
Yeah. So, I can't knock the hustle culture for the youth. It's like, it just depends on what fuels the fire. Yeah. You know what I'm saying? Like
on an individual level.
Like it's like, I think a lot of we didn't grow up with this, in your face.
All the information.
All the information, the YouTube, the Instagram, media, the TikTok, that's just in your face all the time, seeing what everybody else is doing. It's, like I have this conversation. It's really hard. Think about it, like, every time you see something, you know what I mean? It's like, it's what you're seeing every day is something you don't have and you're not doing every day.
Oh, like when you're on social media or whatever.
Yeah, well, I mean, like, exactly. A lot of the reality shows, you know what I mean? Everything that you're seeing is...
Andrea knows how much I hate reality shows. I can't stand them.
Everything you're seeing every day, you're seeing something you don't have or something you're not doing, whether it's running a business, creating, doing this, or all these crazy experiences, or these lavish vacations, or you're seeing all these materials that you don't have. And it's not easy to process that information, because your mind automatically wants to throw envy and jealousy out there, and you have to be the awareness to make sure that you don't let that get into your system, right? But when you have to deal with that so many times in a day, you know what I mean? It's like I'm that part of the mental health issue. It's like, it's not so bad if you go out to hockey and you see somebody driving in a nice Porsche, and that's pretty much all it really is. Like, he's a nice Porsche. Oh, it'd be nice if I had that. But when you got this little box right here that's feeding that crap to you, and depending on how you manage that thing in your life, over and over and over and over again, you have to see stuff that you don't have and things that you're not doing. And I'm telling you right now, it's a serious issue.
Damaging, for sure. And I think that all boils down to, at the end of the day, knowing who you are and knowing what it is that you want to do with your life and what is important to you and what makes you happy. And if you know that, then I think it makes it a lot easier to be able to shut that stuff out.
100%. But you know how hard it is to be an individual and be content with who you are now?
I don't know. I don't know about that. I hear what you're saying. I think it is for a lot of people. But maybe for me, maybe it's because of all the stuff that I've gone through now.
Well, let me ask you a question. How do you feel when you see people that have like successful podcasts and successful businesses, and
Yeah.
you know what I mean? Like
So-
when you start seeing that stuff and you see like whatever you're striving for and you see people that have it.
So number one, like the first feeling that I have is I feel happy for them and I congratulate them on their success. And I'm like, good for you.
And
That's amazing.
I genuinely
genuinely mean that. And at the same time, though, I feel motivated. I'm like, well, if they can do it, there's no reason why I can't, because they're not any smarter than me, or I feel like I'm better at having conversations than they are, whatever the case may be. So it gives me that motivation that if I do keep going at what I'm doing, that eventually I can get there. So it motivates me.
Mm-hmm.
And I think it's people that have the attitude of like, oh, that person's, I can't believe they have that. They don't deserve it. And then you have that negative perception of like everyone else is doing better but me. And yet like I should just be successful just for not doing anything. That's where I think a lot of people have that kind of mentality.
Mm-hmm.
And I think it's a hard mentality to break out of. But that's just me. I could be wrong. I don't know. Like,
yeah, and it's not really like I don't doubt that's the way you feel. I think the real problem is that there is a part of our, you know, fight or flight, our built-in threat mechanism into our psychology that, you know, is always a kind of affected whenever you have to take in some sort of information
like
about
the competition or
yeah. And I mean, it's not like but it's just something you have to like deal with on a consistent basis now, because it's everywhere.
Yeah, I hear you.
And a lot of it is like, and the thing about it is that some of the greatest stuff that I've gotten out of personal development is like, you want the outcome, but you don't want the process.
Yeah.
Like we want the outcome of everybody's success, but we don't even think about wanting the process,
or to even know how much it actually is.
You know what I mean? You look at,
which I think, sorry, I'll just to say, I think that's what I understand now, as I understand what goes involved to getting to that success. And I think going back, like being honest with myself, back when I was younger, when I was building my first companies and trying to get it work, I was that jealousy of like, why do they have that and I don't? Like, this is unfair. Like, this is stupid.
Mm-hmm.
So I had that more negative perception where I would look at somebody and be like, they don't deserve that. Like, this is stupid. Why don't I have this? And then you get down on yourself.
Do you ever motivate yourself in the sense of like, I'm going to show all these people, I'm going to have more than them?
Definitely that.
Yeah.
Definitely
I don't think that's healthy either.
Yeah.
I get stuck like that too, where I'll look at people's portfolios, and because, you know what I mean, I take in a lot of investing content, and I'm like, he's got a bigger portfolio than me. You know what I mean? And it's like, okay, I'm going to, you know, and it's not like I feel that way, because we're all different and we all live different lifestyles. And of course I have larger portfolios than a lot of other people. Yeah. It is what it is, but it's having to, you know, step out of those feelings and having to like not give them any power to run you.
Sure. And being happy with who you are and being content with what you have.
It's hard. It's not as easy as it was probably back 20 years ago, because we have to deal with all the crap that's on our phones, that's on TV, and not even, it's even the phone, but it's the conversations now, because everybody is talking about what they see on their phones. So even though you want to take a break from your phone, you go out into the gym, or you go to the hockey, or you go wherever, the grocery store, everybody's talking about what's on the phones. Yeah. So it's going to make its way into your life unless you live out in the country and you don't talk to anybody, which, you know, to each its own, you know. But maybe. But like I said,
we talk about that every once in a while, Andrea.
Oh yeah.
We're like, get rid of all these people.
Yeah. Absolutely.
Let's go become farmers.
I've hit in that spot, which I would like to have another episode with you guys, because I know you guys have talked about wanting to go off grid and stuff like that.
Oh, still want to.
Yeah, and I think that's my goal. That's its whole episode on its own that we'll get into. But
there's levels too. I don't want to go off grid and be a hermit and not have any company like ever whatever. Like I love this. Like if we're just like,
that's what I want though.
Yeah. Well, no, but
I just want my like 5 dogs and then the kids and you, and I'm good.
And a goat
for sure, and a goat. Oh, we gotta get goats and chickens and all that kind of stuff.
And,
some bulls. Yeah. But I think that the idea though is if you're within like an hour of a city, that if you need to drive somewhere and go to town and see some people or whatever, and go to the city and do stuff, like still want to do that
for sure.
But anyways,
I think but I think like I said, it's this you know, I think everybody's goal should be to find this place of contentment. And I don't think anybody is truly content. Like, I am just content and nothing phases me. I never want more. I'm happy with what I have. I don't need to grow anymore. I don't think that's just not there. I think that's a sociopathic type of tendency to not have any and to not have any emotion to anything, because that's what it sounds like. But you should just be at the point right now where you can just, like, for me, the hardest thing for me was to accept where I'm at and stop the rat race of trying to at growth at all costs, and just be like, I'm taking this. I have it. I've done it. I'm taking it now, and I'm going to make it work. Instead of trying to like be like, no, I need to get to the next level or the next level before I can enjoy myself.
So would that philosophy have served you well when you first started investing? Do you think you would be where you are now if you had that philosophy when you first started?
No, when I first started investing, I was in my growth phase. I was in my, I was growing to where I wanted to be right now. But during investing, your mind can play a lot of tricks on you. You start your goalposts start moving. Where first, like, just round numbers, like when I reach 1 million, that things are going. That's when things are going to change for me. And then you get there, and then okay, well, no, I think it's more like 2 million. And then the 2 turns to 4, and then the 4 turns to 8, and that's the game.
I need 10.
Right?
I need that nice.
I was playing that game with my wife because I'd be going through these amazing bull phases where I could see a path to this amazing amount of wealth, and then all of a sudden the markets reverse, and that chunk of wealth gets cut. And all of a sudden you're just like, man, I just want to get back to where I was. Just get me back there. You know what I mean? And then going through those processes up and down, making a lot, having it get cut down, going up, cut down, it changes you and you grow as a person. And I finally hit my spot when I discovered my strategy with my income investing, that I'm like, I'm just done with the stressing out to have more. I don't need more.
Yeah.
What is it really going to be? Like I felt like I reached a level that me and my wife can live a perfectly happy life together, and we can have all of our time to just be with each other. And that's what it's all about. Just being with the people that you love, having nice, close relationships, having enough money to make your ends meet with a little bit on top for experiences. Yeah. Now, you don't need if you want to upgrade the experiences, you want to upgrade your house, your car, then that's the next level. But that's not worth risking losing this comfortability that I have. Yeah. You know what I mean? And that's a hard thing to do. Yeah. And I'm at it now for about 1.5 years, and it's getting easier, but it's trying to accept it and be like, this is where I'm at, and I just need to make this stay where it's at forever. Yeah. You know what I mean?
I think this is a really good topic, and we go dive into it. I think this is probably a good place where we can say, let's table it for now, and then we can come back next week and kind of talk about this whole idea of what is it that we're looking for in living a good life and a good, healthy life. Like, what is it for you and I that brings us a sense of purpose, that brings us a sense of fulfillment, and that drives us forward? And maybe even try to extrapolate what we think that might look like in the future. Because as we're saying, there's different seasons of life and different philosophies and points of view for what you should be doing in order to get to where you want to go. So I think we could dive into that a little bit, or a lot more, and maybe we can kind of chat about that next week.
Yeah. I think that's a real important topic, because it's so subjective, right? Yeah. Like, to what's a great life, because I think everybody wants their life to be validated. Like, oh, this is what I do. Like, you never notice people love telling you what they do because they want some sort of validation. Yeah, some do, and some some don't. I find I got caught doing that quite a bit, where I don't do it as much anymore, because I kind of learned that wasn't providing me any value. But you want to preach about what you do and how you do it, because you want people to kind of agree with you, because you're because you're a little insecure. I think the hard thing is that trying to know that a good life is very subjective to you, and that you shouldn't be driven by what anybody else is doing. Yeah. And I think it's hard for people to be individuals in the world, because there's just so much fucking influence out there. You know what I'm saying? Like, there's so much influence that people can't just be themselves anymore. And that's a broad, speculation of things. I know not everybody falls in that bucket.
No, I hear what you're saying, and I think you're probably right. But I don't relate to that at all because I don't think that way. And I know a lot of people do. Andrea, what do you think? I think
Yeah, 100%. Like I remember when, this is like a pretty specific example, but I remember when Tristan was first diagnosed with autism, and I was part of a mom's group with a bunch of other moms who had kids with autism, and we had just started like the gluten-free, dairy-free diet with him. We were doing all these amazing supplements.
yeah.
And so I go into this mom's group, and you know how I am. I'm just like, this is what we did with our kid, and we're seeing all these amazing results, and like everyone needs to be doing this, and you should be doing this, and you should be doing this. And it's like, okay, you need to like pump the brakes on this because not everybody wants to do it this way. Not everybody can do it this way. Not everybody has the bandwidth to do it this way. So I think it's like a really similar thing. You want that validation, and I think you want to share like what's working with you. And I find that also in the health and fitness sphere. It's like, and I don't know if you've seen this, but like the latest thing is psyllium fiber. People are going nuts, for
it.
psyllium fiber. Like you need to be having like 20 tablespoons a day, and I'm shitting like crazy and losing all this weight. But everyone's like preaching this psyllium fiber right now because maybe they've had good results or they're getting a paycheck from it. But it's like they want the validation, and then they want to, I think, also share their success. But it's so specific to the person and the family. So yeah,
it's a good point.
Interesting.
It's and she's nailed it on the head. It's like, I feel like we're all like searching, and it comes from a place of, I don't want to say insecurity, but I think like what she was saying, she's passionate. She's very passionate about what she believes in, but at the same time, it's like you want to share. Like I was the same way with investing in health and fitness. Like I want to preach it to people.
Yeah.
Like when people are like, you know, like you got to take your money and you got to put it in the S&P 500, and it's like that, and it's just in one ear and out the other, right? It's like,
even though it could be good for them. Yeah, it makes sense. It's like when you hear people preaching religion to you, you're like, stop trying to convert me. Like, I don't want to hear this.
Well, no, it's religion. And then it's like another example is with like, my dad has type 2 diabetes, and he's had it for many, many years. And I'm like, wait, well, you need to do this, and you need to do this, and this is how you should be eating. And it's in one ear out the other, right? And it's,
And what are you going to do? Even though like it's 100% going to like reverse it. But like,
it's what are you gonna do? It's so tribal. You know what I mean? Like health and fitness, personal finance, and religion. Yeah. They're the most tribal things in the world, and it's like, and everybody wants to be like, you know, when especially health and fitness, whether you want it, like especially with dieting, like, you know, carnivore.
I'm vegan, carnivore. I'm vegan. I'm intermittent fasting.
It's like okay, and then like, but nothing's worse than personal finance because there's money involved, and the attachment to money is greater than health, and it's greater than religion. Wow. Money is like the greatest power. It's the most controlling power on earth, and like, because I see it all the time, like, when people are talking about,
that's why they don't teach.
When people come out with investment strategies, or they're talking about a new ETF, a new product, and somebody doesn't have it, then people are all over the comments just cutting it up. Oh, this is, you should be, I do this, and then, or they're insecure. They're like, well, I don't really touch that one. I kind of do more this, and this. But they have to tell you what they're doing because they're insecure and they want to validate themselves by telling you what they do. But at the end of the day, it's all
they think what they're doing is right. Yeah.
Like, it's all personalized. Yeah. But like, you know, are we going down this road right now with like what constitutes a good life? Or are we going to plug that?
No, let's plug it away because I know if we get into it, then we're going to be looking at the time.
Do you want to touch a little bit about income investing or?
Well, I mean, I think if there's one takeaway, I think I like what we kind of put together as like kind of a 3-part framework. Is number 1, get your mindset right about what your goals are and to how you want to invest. Number 2, figure out the vehicle in which how you can take out a certain amount of money per week, per month, or whatever that fits. And then figure out what it is that you're comfortable in investing in that makes sense for you, whether that's you're going to use that money towards putting into a business, or you're going to use that money towards stocks or index funds, whatever it is, find out what works for you. So kind of if you can lay out those 3 processes, I think that's probably a good starting point for learning how to invest. So what else do you?
And then adding the most important formula of all, which is the best formula for health and fitness, for investing.
Time.
Which is consistency over time.
Right.
I'll tell you right now, consistency over time is it's the best equation for life. Like when I started learning to play guitar, I said to myself, I'm only, the only way.
how's it?
The only way I'm
show
ever
me
going.
what-
So I learned to play guitar as an adult. I think I was like maybe 8 years ago, and I said, and like I picked that thing up. I said, trying to learn guitar. You've been probably playing your whole life. maybe?
When I was like a teenager. Yeah.
Okay, so
Yeah.
trying to learn things as an adult is a little,
It's different.
little different. But I said the only way I'm going to learn this thing is
Just
if
do
I
it.
if I just pick this thing up and touch it every day. And I did that for 6 months and literally just barely scraped the surface. But I said I got to keep doing. So I kept it out in the open. I just kept picking it up and just trying new things. And then all of a sudden you just
making it
start,
easy.
and then just like compounding, I started strumming. I said, oh the God, that starts sounding
Sounds like
good.
an actual
You know what I
actual
mean?
song
And
I
then
want
all
to
of a
play.
sudden,
Yeah.
but then another 6 months, I'm playing chords.
Yeah.
Okay, and then another 6 months, oh my God, I'm actually playing a full song, and then it just grows from it. But that first 6 months of like getting nowhere,
Yeah.
you know what I mean? But I stayed consistent, and over time, I learned to play guitar.
Yep.
So that's what you do with investing. What can you do consistently over time? Which is, I'm going to put $200 into this fund consistently for the rest of my life.
Yeah.
And whatever I can spare on top, the more you can put in there, the more you're going to grow.
Yeah.
So it's like, hey, I got an extra $400. Do I want to go out and spend it at,
bar.
I want to go to the keg for a steak?
On
or
Cindy,
you know what I mean?
with an S.
But that's the thing. That's what makes wealthy people. You know what I mean? They were able to see value in money where others couldn't see value in money.
Yep.
You know what I mean? Somebody that can resist buying that $200 hoodie and put it in the market. Somebody that can resist going to get that $250 bill out at a restaurant and put it in the market. Those little sacrifices
They add up.
is the reason why people are wealthy in their middle ages.
Yep.
It's those types of sacrifices, and you have to build a mindset of like, I want to be wealthy. That then you have to, whether it's for fear.
Then you know what to do because
Yeah.
you're set on it. So if you're a wealthy person, say I'm going to be wealthy, then you know what do wealthy people do? Well, they invest their money.
I mean, I'm
and they save it.
motivated by fear of not being wealthy.
Yeah.
Like I'm motivated by fear of not having enough money, and I have to do something that I don't want to do for my life to just pay the bills. I have a fear of that, and that's what motivated me to, hey, I want my time. Time is the most valuable commodity to me. So and you have to drill that into your brain, just like health and fitness. Like, I do not want to be sick and immobile in my 60s and 70s. You know what I mean? I have control, so I'm going to make consistent changes over time to help that aging curve, so I have a good life right into my 80s. Hence the unforeseeable things that come in,
Of course.
everything. But for most of it, it's in your control, like investing, right?
I like that. Over time. So guys, you've heard it here. If you could play guitar, you could become wealthy.
That's
all.
right.
Is that the takeaway? As long as you can play chords,
That's right.
you can make millions. No, I love it. All right, perfect. Guys, thank you so much for joining. Really appreciate all the support. And yeah, Luke, great conversation as always.
Yep, can't
And,
wait for the next one. We'll
yeah.
be back here next Thursday, and we'll probably pick it up right where we're leaving it off here with the
Sounds good.
purpose of a good life.
Yeah, looking forward to it.
Awesome.
All right, guys, take care. We'll see you next time.